Welcome to The Explainer, where we break down some of the most complex stories out there into something clear and, actually useful. All right, so let's jump right in. What if I told you there's an AI company out there that's growing like a weed? We're talking over 30%, but it's trading at a tiny fraction of its competitors. We're going to unpack the really fascinating case for a company you've probably never even heard of, Zeta Global. So here's how we're going to break this down. First, we'll cover what Zeta actually is. Then we'll dig into the really exciting part, that incredible growth story and the AI that's powering it all. But, it's not all sunshine and roses, so we'll definitely weigh the risks. And finally, we'll put it all together and tackle that big valuation question. Okay, so first things first, what exactly is Zeta Global? Well, at its heart, Zeta has this thing called the Zeta Marketing Platform, or ZMP. The easiest way to think about it is like a super smart AI brain for marketing. It helps huge companies find, grow, and hang on to their customers. Now, what's really wild here is the sheer scale of this thing. This isn't some small startup, okay? They have their own proprietary data cloud with profiles on over 245 million consumers. Think about that. And they're not just serving anybody. We're talking about an elite client list, including 44 of the Fortune 100. And the business model? It's almost all recurring revenue. Super sticky. All right, so with that foundation, let's look at how it all translates into some pretty incredible growth. This is really part one of the bull case for Zeta. I mean, just look at this number. The top line is absolutely exploding. They just crossed $1 billion in revenue, growing an incredible 38% year over year. Let that sink in. Their revenue has more than doubled in only 3 years. And this is the really crucial part. It's not just growth for the sake of growth. This is profitable growth. Their margins, what's called adjusted EBITDA margin, are expanding right along with it. That's a huge, huge sign that the underlying business is getting stronger and more efficient as it scales up. And then there's this. For 16 quarters in a row, that's 4 straight years, Zeta has beaten what Wall Street expected and then raised their forecast for the future. That classic beat and raise cadence is exactly what investors love to see. It shows they're not just getting lucky, they are executing. Plain and simple. And you can see it so clearly on this chart. The business isn't just growing, it's accelerating. It's like they've shifted into a whole new gear. That's the holy grail for a growth story. So you gotta ask, what's behind all this? What's driving this incredible performance? Well, that brings us to their secret sauce, the second part of the bull case. It really comes down to this idea they call the data flywheel. It's a pretty powerful concept. Step 1, their platform sucks in trillions of consumer signals every single week. Step 2, the AI chews on all that data and gets smarter. And here's the magic. Step 3, those new smarts improve the results for all of their clients. So better results bring in more clients, which means more data, and the flywheel just spins faster and faster. And look, this isn't just some marketing theory, it's real. Their brand new generative AI tool, Zeta Answers, is putting up some frankly jaw-dropping numbers. Think about this, 30% higher engagement and 4 times better conversion rates. That is the kind of result that makes a chief marketing officer sit up and pay attention. Okay, but it can't all be good news, right? Of course not. It's time for a reality check. To get the whole story, we have to look at the other side of the coin, the bear case, because Zeta is definitely facing some huge challenges. First and foremost, this is a classic David versus Goliath story. Zeta is in an absolute brawl with giants like Adobe and Salesforce. I mean, these guys have marketing clouds that are massive, with practically unlimited resources and brand names everyone knows. And beyond the competition, there are other big headwinds to watch. You've got data privacy. Rules like GDP-based compensation is really high, which means on paper, by standard accounting rules, they're not profitable yet. That's a red flag for a lot of people. Okay, so let's put it all together. You've got this insane growth story on one side, and these very real, very big risks on the other. So how does the market balance that? Where does that leave the valuation? And this, right here, this is the entire story in one chart. This is the punchline. Look at this. Zeta is growing faster than its main competitors, HubSpot and BRZE, yet its stock is trading at a massive discount. It's not even close. We're talking a fraction of their valuation multiples. So why does that gap matter so much? Well, it tells you exactly what the market is thinking. It suggests that investors are pricing in all those risks we just talked about, the Goliaths, the regulations, way more heavily than they're pricing in the incredible growth. And that gap, right there, is where the potential opportunity lies for an investor.
So, what do the pros think? Well, Wall Street analysts seem to be pretty convinced. You got a ton of buy ratings. And look at this, 0, not a single sell rating on the stock. That's a pretty powerful consensus.
And when you read the reports, you see analysts pointing to the exact same thing we've been talking about. They're highlighting the AI innovation, things like that new Zeta Answers product, as the key drivers for why they think this growth can continue.
Which leaves us with this one big, fascinating question. With all its growth and that AI edge, is Zeta on the path to becoming a giant in its own right? Or does its relatively cheap stock make it the perfect takeover target for one of the Goliaths who wants to buy that growth instead of building it? The answer to that is going to be one heck of a story to watch.